The US is facing a massive debt problem, one that has far reaching consequences for the entire global financial system. And top economists and investors are sounding the alarm that those who don't take steps to protect themselves against what comes next will find themselves much poorer. In this video, I want to be diving into exactly what the issue is, where top economists and investors are saying that we're heading next, and what it means for the US and the wider global economy, and how you can take advantage of this coming crisis and what comes next to not only protect your wealth, but possibly make a fortune. And to understand the current debt problem in the US, you have to have some sort of comprehension of how we ended up here in the first place. And it all starts with the very concept of money itself. Money hasn't always existed. And although most people might not think of it particularly in this way, money is a technology that people invented. And contrary to popular belief, the birth of money brought with it an insane amount of prosperity for humanity. Before money, people relied on favors and social currency. But over time, other mediums of exchange were used to make these trades. Sometimes it was seashells, sometimes it was beads, or other scarce items that really just differed depending on geography or culture. Eventually, a government came along and they invented a new technology called coins, making these coins out of precious and rare metals and kind of further standardizing this medium of exchange process. And this might not seem significant, but it actually had a massive impact on society. And I know we're getting a little bit into history here, but I swear this is really important to understand how this debt crisis works, why it's such a big deal, and where we're going from here. Creating coins removed just enough points of friction and gave just enough utility to money to open up an entire world of new opportunities. Before coins were invented, 90% of people were farmers. And after coins were invented, you had for the first time people able to choose to do something other than farming as a living. Some people became artists, some people became craftsmen, some people became merchants, etc. And all of this brought about new innovations, new technologies, and new improvements for everyday life. Now, coins originally were these ledger systems managed by nature. That is, you could only issue as many coins as gold and silver you had to mint them with. Governments couldn't print new gold. They had to go out and mine new gold. So governments were constrained to spending only the amount of precious metals that they had in their treasury. If they wanted to go to war or they wanted to fund government expansion, they either had to, one, have money in their treasury to go fund these things, two, bring in further revenue by maybe raising taxes, but obviously this could come with a significant amount of political risk, or three, find some country or individual who could lend them more gold and silver. Or if they were really desperate, they could devalue their own currency. And they would do this by melting down their coins and replacing some of the gold and silver with cheaper, more abundant metal. The problem with this was it was rather difficult. You had to actually collect these coins in circulation in order to melt them down. You had to physically melt them down and then remint them. And typically it wasn't long before people would catch on that these new coins were like less valuable than the old ones. And you'd have like the older coins that had never been reminted and reissued that were still like 100% gold and silver, trading for a lot higher value than these newly minted coins. So it took a lot of effort to do this, and governments were really constrained in their ability to devalue their own currency. Fast forward to the invention of paper money. People didn't like always carrying around coins. Sometimes the metal was a little bit heavier, and it was a really slow process to transport a lot of these coins all over the place. That's when a couple smart merchants came up with a genius idea of having people deposit their gold coins into a bank and issuing them a paper receipt. So say someone would deposit their gold coins into Bank A, get issued a paper receipt, and then travel or whatever to Bank B, turn in that paper receipt to redeem the same amount of gold coins. This, of course, made transporting money a lot easier because all you had to carry around was this small paper note. Eventually, people began to trust these paper receipts as a form of money. And they would simply trade the paper receipts rather than coins because it was so much easier. Meaning, there came a point where most people were no longer turning in the receipts to redeem them, to actually go redeem them for this physical gold. Instead, they just let the gold sit in the bank. And when people stopped redeeming their paper receipts for gold, banks quickly figured out that they could actually lend out the same pot of gold to multiple people at the same exact time. Imagine it like this. You take your gold coins to a bank for safekeeping. The bank gives you a paper note, a receipt that says this note is worth 10 gold coins. Now, the bank doesn't just lock these 10 gold coins in a vault and not touch them until you come back. Instead, they only keep a small fraction of those gold coins on hand in case you come back to try to redeem them for the paper receipt that you were just given. Let's say, for example, they keep around 10%. So you give them 10 gold coins, they're going to lend out the other 9 gold coins, and they're going to keep just one of them on hand in case, people come to redeem their receipts for gold. And this system works as long as everyone doesn't come at the same time to try to redeem their paper receipts for gold. Now, of course, some banks would eventually overdo this. They wouldn't keep enough reserves on hand. Too many people would come to try to redeem their paper receipts for gold. They wouldn't have enough. This would cause a run on the bank, and the bank would end up collapsing, and a lot of people would lose all their money. And enough banks eventually ended up collapsing, and enough people ended up eventually losing their money. The governments decided to step in, and they decided they thought they could make these systems safer by establishing what's called a central bank. And these central banks would essentially oversee the entire banking system, basically making sure banks kept proper reserves, always had enough gold on hand to handle various withdrawals, and acting as what's called a lender of last resort in times of crisis or instability. They were like the bank of banks run by the government. And they would hold huge amounts of gold, and they would lend that gold to various banks if they were having trouble meeting withdrawal requirements because they didn't have enough reserves on hand. And this system seemed to work for a little bit. Over time, though, wars and economic crises led these governments and these central banks to printing more paper receipts than actual gold they had to back the paper receipts with. This is really similar to what we saw with early governments and coins. Only instead of governments having to actually physically collect the coins, melt them down, reissue them, etc., governments could a lot more easily devalue the currency by simply printing more paper receipts and pretending like they had enough gold to back those paper receipts with. But in the same way that people kind of caught on to the fact that they were devaluing these coins, people kind of caught on to the fact that they were devaluing these paper receipts, and too many people tried to turn in these paper receipts to withdraw their gold at the same time. Dealing with a crisis that these central banks couldn't fix because the central banks themselves had printed too many paper receipts, and there just physically wasn't enough gold to back all the paper receipts in circulation, the governments declared that they were still backed by gold, but that now normal people can no longer redeem their paper receipts for the underlying gold value. And that instead, moving forward, only banks and nations could actually turn in the paper receipts to redeem them for the physical gold. And they said this was to provide a much safer and more stable banking system. And of course, now that people could no longer turn in these paper receipts to actually redeem the underlying gold, this led to even more money printing and devaluing of this paper money. And this got so bad that eventually other nations caught on, and they demanded to turn in their paper receipts or their paper money to redeem for the underlying gold value. And this led to finally governments declaring that no longer were these paper receipts redeemable or backed by gold. Instead, these paper receipts were backed by the full faith and credit of the government, aka the old paper money that was simply a receipt for gold were no longer receipts for anything. This new kind of fiat money was backed by nothing. Now, up until this point, governments had always been constrained by at least something in their ability to print new money. Originally, they were constrained by nature. You could only mint as many coins as gold and silver you could mine up, and you could only spend as much money as you had physically in your treasury. And as we know, governments did everything they could from the birth of money to try to cheat and devalue that system. Like we talked about, devaluing the coins with worthless metal, printing more paper receipts than actual physical gold they had to back them with. And in 1971, for the first time in history, governments became completely unconstrained in their ability to devalue their own currencies. Previously, if they wanted to fund a war or fund government expansion, they would have to tax their citizens. And as we know, that risks a major blowback, as the British found out the hard way when they overtaxed their American colonies. And the colonies decided to start a revolution and overthrow their British overlords, establishing their own country. Now, however, if the government wanted to fund a war or fund government expansion or spend money on whatever they wanted, they could simply print as much money as they physically desired, secretly siphoning away value from everyone's bank account without anyone noticing. That's why money printing or inflation is called a hidden tax. It's a way for governments to tax anyone as much as they want, anytime they want, without the ability for anyone to stop them and without the vast majority of people even noticing. For those of you who don't understand, think of it like this. Imagine you have $100 and the government prints a lot of money. As a result, inflation causes prices to rise by 10%. That $100 now buys only what $90 would have bought before inflation. Essentially, the value of your money has been taxed because of inflation, because of the government printing money. This is why your grandfather always talks about how he could buy a burger for a nickel, and today buying that same burger might cost you $8 to $13. The value of a nickel has been devalued so much that once it could buy a meal, and now it's practically worthless. This is also why everything today is constantly feeling more and more unaffordable. It's why nobody can afford to buy a house anymore. And it's why people are constantly feeling poorer and poorer despite making just as much money. Your wealth and wages are slowly being siphoned away by uncontrollable government spending. Giving the government essentially God mode over the money supply has turned out exactly as you would expect it to turn out. They printed and printed and printed. Anytime they wanted to spend money, anytime they wanted to fund something, they turned on the money printer and they devalued everyone else's money, everyone else's life savings, everyone else's wages, so that they could spend money on what they wanted to spend money on. And as they printed more and more money, they caused more and more inflation, as we talked about earlier. And over the course of history, some countries have overdone this process and caused what's called hyperinflation. And this is where the value of their currency is devalued so rapidly that the money they earn in the morning has to be spent before the day is over, because it'll be worth half as much by the next day or drastically lower by the next day. Like, imagine you got your paycheck for $3,000 and you have to spend it all that same exact day, because if you don't, tomorrow that same paycheck will now only buy you $1,500 worth of things. And these countries, of course, tend to fall into extreme poverty because their financial system is so unstable. Now, countries that wanted to avoid hyperinflation would rotate between printing money and taking on massive amounts of debt, which taking on debt is really just printing money spread out far into the future. For example, instead of printing money today, they'll say, instead we'll take on a bunch of debt, which is essentially the same thing as like if an individual racked up a ton of credit card debt. The logic being that like they'll figure out a way to pay it off in the future because they want to buy something today. And in the US government's case, the logic would be that we'll have a much more prosperous country in the future where our economy will be a lot stronger. We'll have this huge surplus of money that we'll be able to use to pay off this massive amount of debt. But as more and more debt piles up over time, it becomes literally impossible to ever physically pay off this debt. For example, currently the debt in the US is around $35 trillion. And annually, the US government currently operates at a loss. And even accounting for tax income, so all the money they bring in from taxes, even accounting all of that, the US government takes a loss of over $1.5 trillion annually. This is literally the same thing as if you ran, like, say, a coffee shop. And over the course of a year running that coffee shop, instead of making money, you lost like $100,000 just running that business. That's the same way the US government currently operates today. And we've operated at a loss like this for the last few decades. In fact, if you go back over the last 50 years, the US has only had 4 years where they've actually turned a profit. And the combined profit of those 4 years out of the last 50 was $559 billion, or $139 billion a year averaged out. So even if we assumed over the next 50 years, we could 10x the amount of profitable years up to 40 years. So out of the next 50 years, 40 of the 50 years were profitable years, which is obviously an insane improvement of where we are today, sitting at only 4 out of the 50 years being profitable years. Given an infinite amount of time, we could not physically pay off the debt in the US. So of course, this begs the question, what in the world is the US government going to do? Well, politicians will come on the news or come on talk shows and they'll tell you, all we need to do is we need to get billionaires to pay their fair share. That's how we fix this country. However, if we confiscated 100% of the wealth of all the billionaires in the United States, we took every dime they had. We said, we pass a law tomorrow. If you're a billionaire, we're taking 100% of your assets, your wealth, everything. 100% of the wealth from every single billionaire in the US. That would only be enough money to fund the US government for 9 months. And all of this leads to what I call the Fiat Doom Loop. And this is where we find ourselves today. Governments, unconstrained by having to mine gold and silver and actually hold it in their treasury and be fiscally responsible, have printed unlimited amounts of money and taken out unlimited amounts of debt. So much so that the only way to physically possible pay off this enormous amount of debt is to inflate it away. AKA, we have to print a ridiculous amount of money to purposefully devalue our currency so that we can afford to physically pay off this debt. This is why I said that debt is just a form of future money printing that future generations are going to have to pay for. And unfortunately, we are that future generation. And this process is not going to be pretty. This is why billionaire hedge fund manager Paul Tudor Jones recently came out and said, all roads lead to inflation. I'm long gold, I'm long Bitcoin, I'm long commodities. All roads lead to inflation. All roads lead to the massive devaluation of the US dollar. We are currently in the Fiat Doom Loop. We print money to pay off unsustainable debt, which causes inflation. To combat inflation, we typically raise interest rates. However, that means increasing the amount of interest we have to pay to service our debt. In the past, for example, when we had really bad inflation, we could raise interest rates all the way to 20%. Today, however, that would be catastrophic. At 20%, that would mean the annual interest on our debt would be around $6.6 trillion annually, which would be more than the current annual revenue of the entire US government combined just to pay the interest on our debt. It'd be like if just the interest on your credit card payment was more money than you made in an entire year. Impossible to sustain. Even today, the cost to service just the interest payment on our debt is more than we spend on the entire US military budget. And rates are just under 5% right now. So as the Fed raises interest rates, the US government ends up taking on even more debt because they have to pay for all the things that the US government pays for. Plus, they have to now pay for this increased interest spending. This, of course, leads to even more money printing, which leads to even more inflation, causing the cycle to loop over and over and over again. And to make matters even worse, the more we print money and the more we devalue our currency, the more the world loses confidence in the US dollar, which means the less people who want to buy and hold our debt and the higher borrowing costs that we have to pay. And this cycle is just going to continue to accelerate and get worse and worse and worse. Again, as Paul Tudor Jones said, all roads lead to inflation. The only way to pay off $35 trillion in debt is to devalue the US dollar so much that $35 trillion in debt isn't that much money. So if you hold US dollars, if you hold fiat, you are slowly going to get your value siphoned away into nothingness. You might have thought I was being overdramatic with the title of my video where I said, do this or you're gonna die poor, but I wasn't. This cycle will only continue to accelerate, and if you do not do anything to protect your money, if you hold all your wealth into fiat, you will watch your wealth get diminished into nothingness. So at this point, you're probably wondering, what can you actually do to protect yourself? Well, as Paul Tudor Jones continued, he's long gold, he's long Bitcoin, and he's long commodities. You have to hold assets that the government can't steal value from via money printing, because they absolutely are going to be printing a lot of money going forward. They have to. They have no choice at this point. That means you can hold real estate, you can hold stocks, you can hold gold, you can hold Bitcoin, you can hold commodities, crypto, etc. You want to hold your wealth in assets, not cash. And this is the exact reason you hear people saying things like Bitcoin's going to hit over $1 million a coin, or it's going to hit over $5 million a coin. That's not because some of these people think that Bitcoin will have the same value as $1 million per Bitcoin would today, but it's because the value of $1 million is going to trend lower and lower as more and more money is printed. Remember, you used to be able to buy a burger for a nickel. Now it costs you $8 to $13. This is also why crypto is the next evolution of money. It gives us all the benefits of paper money. In fact, even more so because it runs at the speed of internet. It's digital money, so it's actually even faster and more convenient than paper money. And it pairs those benefits with the scarcity we used to have with gold and silver. Remember, governments can't print more gold and silver. They have to go mine it if they want more of it. The scarcity of a money supply built on gold and silver is determined by nature. Well, in the exact same way, nobody can print more Bitcoin. But unlike gold, which is heavy, it's hard to store, it's hard to transport, it's easy to counterfeit in the sense that you could have like a gold bar that the outside's, maybe real authentic gold, but the interior is like a cheaper metal. We talked about this with gold coins where governments would devalue the currency that way. Unlike some of the drawbacks of gold, Bitcoin is digital and it can be moved around the world at the speed of the internet. Again, it's even more convenient and faster than paper money. It's digital money. And it's not just Bitcoin. You have things like Ethereum or ETH, which is its own form of digital money. And built on top of Ethereum is this entire digital financial system and digital economy. Crypto's main innovation is that it separates money from government, which, as we've seen historically, governments have been incredibly bad stewards of financial systems. So a bet on crypto is a bet on an open digital financial system anyone can use and no government controls. And for this reason, I think that crypto particularly is a great way to hedge against the fiat doom loop, as it solves many of these problems that have plagued these systems for thousands and thousands of years. Make sure to sign up for my free weekly crypto newsletter. It's mostly just all my content I put out each week in an easy email so you don't miss it, but occasionally I drop some other cool stuff in there as well, including sometimes I mention things I'm buying before I ever talk about it on my YouTube channel. Also, if you really want to dive deep, make sure to check out my weekly podcast, the 1 to 1 Million Podcast. I interview projects, talk about the markets, and interview various traders and experts in the crypto space. As always, none of this is investment advice. None of this is me telling you what you should or shouldn't do with your money. These are just my personal thoughts and opinions, and I'm not your financial advisor. If this video is helpful, make sure to hit that like button. If you have any questions or comments, let me know in the comments down below. And if you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.